Welcome to TradeTheNBI.com. This is John. This report is for the 30th of May, and well, we've had this nice little run. We've sort of paused just a little bit. There isn't really a whole lot of activity taking place. However, if we look at the beginning of the month, which began right back here, we've seen a reasonable increase from the 23s to the 24 early part. We were kind of expecting to get to the 24, 25 range on the way to the 2450 target, which, gosh, we've had that target for quite a while. That's all right. It's actually accelerated here on the back end right after the election has been the prime impetus. We've had a few decent little shock days, and then this pretty nice return run has been fairly clean as far as, what we saw from the DOC here. We ended up with the indication that we had, started back over here where we got a little frothy, and again took place, and that was the massive decline day on a whole lot of the rumors, Russian this, that, and the other, and I think the market has sort of just said that's kind of becoming nonsense, and there's really nothing to suggest that there's going to be any fruit from that. And the fact is now we're talking about more Greek contagion. That's the latest news. Hasn't really impacted the euro all that much. I mean, just a tiny move. It's had its pretty good rise. The NASDAQ keeps climbing, making Bezos, Apple worth staggering sums compared to what they actually net, but that's okay. That's never been an issue for them. Why should it start being? So the euro, from its retrace, has plenty of room. It pretty much got bought all the way back up from the little decline on the concerns that Greece may actually default if they don't get debt relief, and this has been going on for now how many years? It seems like forever. I don't think it's going to end. They can't sustain the situation they've got, so at some point they're going to have to either pull the trigger or the EU is going to have to give them a break. How that's going to function, we don't know. Regardless, I think the European Union feels that it's got things put together, and that's why we're seeing the euro within the range. Central banks have agreed to keep it right in that float range, so it's all good. Treasury's still holding up at an unusually high level, given the Fed's indication of further action on rates higher. Makes no sense, I know. Oil, OPEC and their dream of trying to control price, it's kind of funny now, the ability of shale production. Now we're even seeing California getting into the act of producing. It's going to have a staggering impact on the supply that's available. What this is an indication of, though, on any decline is that we're still not seeing enough growth. And that's really the telltale. If we start to see a break moving forward, then above this, on the USO here, at least 11 range, simply because it's that growth that is going to drive demand. There's no other way around it. And China is going to be a primary viewpoint on that. And if Chinese growth looks weak, expectation for world growth has got to be, put into check as well. Gold is going to continue to be reasonable player. It's going to have fits and spurts. I mean, I'm not looking for a one-directional move like we had called way back when it was much lower. I remember talking about it at the 300 range. That was a huge buy, and then it went to 800, and it was still considered in my mind a buy at that time, and we skyrocketed. But then we knew when it was time to get out, and had that significant retrace. But a little overbought right here. Not too serious at this particular point. I mean, you've got the ABM following it. That's a pretty easy run. You're going to start to see the changes in the red lines on the ABM going forward, because it's going to reflect more of what we're talking about in the DOC short readings. It's not going to be so early with it coming in these little shorter spurts. We're going to be having it gauge per longer ranging effect, which I think is a little bit more effective when viewing it over time. Here's the 5K. You can see this was a nothing Friday. I mean, there was like zero activity from the open, to where you close. Well, it was right over there. We were at the high point. We had the holiday, nothing happened in between there, and nothing's happening right now. I mean, this is just a flat, and that's going to be until people come back. And, there's the old sell in May, go away, but now you're going to have end of month trade here the next couple of days, and potentially, if we get some activity with this, Greek stuff, we might get some volatility, which wouldn't that be a nice thing for some day trades in between? A lot of complacency built in. And the fact now that we're seeing that clearly Congress is not going to do anything with either healthcare or taxes this year, and who knows if ever at that point. So as far as Trump's agenda is pretty much zero stop, full period, end of discussion, and anything now would be a surprise if it takes place. That doesn't change the fact that from a deregulation standpoint, that's still going to have a huge impact as far as business goes, so that's a benefit. And secondarily, people forget that even though they say his budget's dead, the executive branch is, they finally appropriate the money from the Congress, but if they choose not to spend it, it creates sort of an interesting situation. And that may be a future card that Trump holds for end of year budget negotiations, because he may have more time to deal with it and still be able to keep things afloat. So we'll see how that plays out, because that's going to be the real battle, is the 2018 budget going forward. And that's where the fireworks are going to start, and we'll see how the market responds to the idea of a looming shutdown, and that it actually may be a benefit, because frankly, when the government isn't doing anything, things work out far better than when the government does things. So we'll see how that plays out, but we'll be able to see it on our readings anyway. Regardless, you'll be getting an email for renewal of your indicators and that, so that we're ready to take on the next month, and hopefully we'll get a little bit more activity, I think, going through here. We just need a spark that's going to actually cause the market to want to take effect, and even early summer vacations and that could start to do it, because when you get the young traders back in, they like to push and pull just to flex their might, which can also be very helpful during the summer months. As always, though, trade well. We'll talk again later.